Okay guys, how are you? I hope all is fine, and in this video I'm going to share another concept which is normally about the flexible budget statement. We're going to show contribution and profit as well with the help of some data which obviously are in front of us in the form of a problem or actually an understanding. And as we are covering the area which is Chennai for ACCA. So our mainly actually contribution or the purpose of this video is to cover the area Chennai ACCA, the headquarter area for ACCA in India. So the purpose of this video is to explain a problem or a concept through a problem, so that obviously the students who are actually willing to opt in or take performance management F5 as the examination sitting, and in the paper form or in the CBS they can understand some of the concepts quite easy and quick. So the problem is stating with the McDreamy. The name of an organization is an industry sector which is recovering from the recent recession. The directors of the company hope next year to be operating at 85% of capacity, although currently the company is operating at only 65% of capacity. 65% of capacity represents output of 10,000 units of the single product which is produced and sold. 100 direct workers are employed on production for 200,000 hours in the current year. The flex budgets for the current year are as follows. Capacity level is 55%, 65%, and 75%. Direct materials are the information is in front of you, and also the total cost is in front of you. Profit in any area is budgeted to be 16 to over 3% of sales. The following percentage increases in cost are expected for next year. That is direct material, that is 6%, direct wages is 3%, variable production overhead 7%, and variable selling and distribution overhead 7%, fixed production overhead 10%, and fixed selling and distribution overhead is 7.5%. So administration overhead is what? 10%. The required prepare for next year flexible budget statement on the assumption that the company operates at 85% of capacity. Your statement should show both contribution and profit. So this is the purpose. Of dealing with these videos. So let's see how we're going to cope up with such concept with the help of the problem. And we're talking about flexible budget contribution and for next year operating at operating at 85% capacity. Okay, so we're going to work out some of the workings as well, output, and we have also some workings. We have the form of okay, and in the form of this and this. So let's see how we can cope with different sort of the concept. Output is what? 13,022. Of the capacity output of 10,000 units of the single product which is produced and sold 100 direct workers. So that is 10,000 units of 65% of capacity. 65% of capacity represents output of 100,000 units of the single product. Okay. and 65% of capacity represents output of 10,000 units of the single product which is produced and sold. 100 direct workers are this. So this is the value. So the units would be calculated first of all, and afterwards we're going to work out the workings. One is output. So let's see what are workings. W1, 65% of capacity is 10,000 unit. 100% of capacity is 10,000 multiplied by 0.65, that would be 15,385 units. And 85% of capacity is into 0.85, that would be 13,077 units. 75% of capacity is 11,538, and 55% of capacity is 8462. Okay, so with the 85% of capacity we have this 13,077 units. The output would be 13,077 units. Sales revenue. So the number, then we're going to work it out as a sales revenue. That needs to be worked out some later with the help of some of the other calculations. So variable costs involve direct material, and direct material would be calculated current direct material cost per unit is 1 million divided by 10,000, so that would be 100 per unit. Okay, so that would be the value, and to that would be the 100 per unit value. And the flexible budget allowance for the next year would be flexible budget allowance for next year is, first of all, $100 per unit. You add up 6% into 13,077. So that would be what? With the capacity of 6 pieces the direct material, then direct material increase is 6%. Direct material increase is 6%. Adding 6% to the unit with the price of the unit is 100. So the direct material value would be 13,861.62. So that would be the value that you need to put in as an working 2 over here. Working 2, and that would be 13,861.62. Okay, that is direct material. Now talking about direct wages. When we talk about direct wages, we normally have to calculate with the help of working 3. So the working 3 needs to be done. Current direct wages cost per unit. Cost per unit. That would be 1750 divided by 10,000, and that would be 175 per unit. That would be the current direct wages cost per unit. Now the flexible budget allowance for the next year. Flexible budget allowance for next year would be 175 multiplied by 1.03 or 3% in multiplied by units. So that would be 2,357,129. So that would be the working 3 value you need to put in over here. That is 2,357,129. So this is how the working 3 would be calculated. And now is the variable production overhead. So this is working 4. Production overhead increases by increases by 53,830 for an increase in activity of 10,000 minus units. So variable production overhead per unit is 35. Variable overhead allowance for 85% capacity is equal to 13077 into 35. So that would be 457,695. 57695. So the increase, adding 7% increase for the variable production overhead, so that would be $32,039. Adding both of it would be 489,734. So this is the value of variable this is the production overheads. We are talking about the production overheads because this is at the 85% of capacity. So we need to see 55%, 65% and 75%, and that would be added. So the working for would be 489,734. Variable production overhead would be 489,734. Okay. Now variable selling and distribution overhead. Variable selling and distribution overhead. For that reason, we need to see that how we're going to use the data. Selling overhead increases by 7690 for an increase in activity of 10,000 minus 8462 units. So variable cost per unit is $5. Variable overhead allowance for 85% capacity is equal to 13077 into $5, so that would be 65,385 plus 7% increase would be 4577, and that would be 69,962. 69,962. Okay. Now we need to calculate this all will help us to give us the contribution. Is sales revenue and the variable costs. You're going to subtract the sales revenue, which would be calculated just in a while. From this is the production overhead. I hope the visual is very clear, and if not, if you see at any moment of time this video, please recommend the quality of, or please tell us about the quality of the video as well. I can see that it is not that of value, but if you are actually taking it to understand, I hope it is meant for that. And for that reason, variable production, the contribution is the subtraction of sales revenue from the variable cost. You're going to have the contribution, and then when you're going to subtract the fixed cost, you're going to get the profit. So now we're going to actually go towards the calculating of the fixed overhead or the fixed cost, so that we can see that we're able to actually subtract the fixed working 6 total production overhead at 65% capacity. That would give us 650,000, and less would be the variable overhead, that is 35% working 4 already been done. On the basis of that, that would be 35,100, and fixed overhead this year is 300,000, and plus 10% of increase would be 30,000, and that would be again 330,000. Total allowance is 330,000. So this is how you're going to say that this is the allowance value, and you can actually put in as the production overhead. That will be working 6. Talking about the fixed cost production overheads, that would be working 6, and that is 330,000. Now we're going to talk about the selling and distribution overhead. Working 7. Overhead, and that would be calculated, and total selling overhead at 65% activity is 200,000, less variable overhead is 10,000 into $5 already been worked out 5, so that would be 50,000. Adding both would be 200, and subtracting 1, that would be 150,000. That is the fixed overhead per year, plus 7% increase would give us 11,250. So adding both will give us 161,250. That is the total allowance. Okay, So that is the total allowance, 161,250. 161,250. And we're going to calculate the administration overhead as well. Admin overhead, that is 8, and this would be calculated. Admin overhead is 120,000 multiplied by 1.1, that would be 132,000. So this is how you're going to calculate 132,000. Now you're going to calculate the revenue, working 9. Sales price is 100. Profit is 16.67 and cost would be 83.33. So the profit as a percentage of cost would be 16.67 divided by 83.33 multiplied by 100%, that would be 20% of cost. So the total cost would be 4302987 plus 623250. That would give us 4926237. Okay, profit at 20% of cost is 247, and the sales value would be 5911484. So you're going to put it over here, and that would give you the sales revenue, and that is 5911484. 5911484. So adding this and subtracting from this, you get a contribution, because this whole sum is 4302987. 4302987. Subtracting this from this, you get 1608497. So this is the contribution. So what you have calculated, prepare for next year flexible budget statement on the assumption that the company operates at 85% of capacity. Your statement should show both contribution and profit. We have shown both contribution, and we have also shown the profit figure as well. That would be adding this 623,250. 623,250, subtracting it would give us 985,247. 985,247. This is our profit, and this is our contribution. So we have calculated both with the help of an example. I have actually used some of the used material just to actually save time, and so that the example can be completed within time. If you see any sort of mistake, a logical mistake especially or primarily, you can point it out straight away. We can discuss in the comment section, or else we can discuss in the chat. It's really up to you, but you show your confidence or ill confidence on the the approach. It's really up to you, but I have actually produced a video that may help you to actually get some of the basic understanding of preparing a flexible budget statement and how you're going to calculate. Obviously, we're using the data that normally provided in the example, so that may help you to understand it better. So just rewind it once, twice, you'll able to actually get as much of the information and also the knowledge, and able to grab the skill part of the problem as well. So with these remarks, I'm going to end up my video. For the next video, till then, take care and have a nice day.